In this video, I want to show you a very interesting and smart TradingView indicator not a lot of people know about. Unlike the majority of technical indicators out there that perform well only in a trending market, this indicator shows a great performance even when the price action is ranging. I will also give you a complete strategy with this tool that you can follow today and make a ton of money from trading forex, crypto, stocks or any other market with high level of volume. And to show you the real numbers behind it, I will backtest the strategy 100 times on a 5-minute time frame. I'm using TradeIQ for backtesting my strategies. This is officially the best backtesting service on the internet. Thousands of traders around the world are using TradeIQ to get an edge in their competition. TradeIQ is a lot faster than a traditional backtesting method. All you need to do is to set up your initial account size and the profit and loss per trade. TradeIQ will give you all the information about your strategy, such as the win ratio, the profit and loss, the profit factor, and much more. You will also find some other cool features on their website, such as the position size calculator, which can be really handy for those who trade forex and commodities, the profit and loss calendar, where you can track your trading performance and make some important notes, and the indicators and strategies menu. Here you can find and download some super accurate tools for MT4 and TradingView platforms, and they've all been proven to work. If you're not entirely sure how to backtest, no worries, you will get a full step-by-step backtesting plan which has $100 value. If you're not sure how to build a profitable and reliable trading strategy, no problem. You will also get a full course on how to build a profitable mechanical trading strategy which has $270 value. And if you sign up right now, they'll throw in 4 pre-made high-quality strategies that have $100 value. So that's around $500 worth of bonuses, all for free, but only if you sign up right now. TradeIQ has a 7-day free trial, so there is literally no risk at all. So go ahead and check it out. I will leave a link in the description below. Alright, so we're currently looking at the price of GBP JPY on a 5-minute time frame. Just like I said, this indicator works on all markets and all time frames. You can use it on a 1 hour, 4 hours, or even a daily chart. So in order to add our indicator to the chart, we need to first click on the Indicators tab and search for Polynomial Regression Channel. Then you need to select this indicator by Donor Van Wall. This indicator is very similar to the linear regression channel. Let's actually add the linear regression channel to the chart as well, just to understand the overall concept behind it. As we can see, the linear regression channel is a 3-line technical indicator used to analyze the upper and lower limits of an existing trend. Linear regression is a statistical tool used to predict the future from past data. This indicator gives potential buy and sell signals based on price volatility. It consists of 3 parts: a linear regression line, which is the middle line, the upper channel line, and the lower channel line. Unlike the polynomial regression line, a linear regression is a straight line that best fits the prices between a starting price point and an ending price point. Both of these indicators are used to determine the overall trend direction. The middle line acts as a midpoint of the trend, whereas upper and lower channels show the top and the bottom of the trend. And the most obvious difference between these two indicators is that the polynomial regression is based on a zero-lag SMA, which makes it more dynamic. Notice when the price action is moving in the uptrend, the middle line changes its color from red to green, and it's also pointing upwards. On the other hand, when the trend is bearish, the line changes from green to red and is pointing downwards. When the price action leaves the channel, this is an indication that the market is being oversold or overbought. Also keep in mind that the larger the channel, the higher the level of volatility. The smaller the channel, the lower the level of volatility. There are multiple ways how you can utilize this indicator, and none of them are actually wrong. For our strategy though, we need to make some adjustments to this indicator first. So let's access its settings. And in the start section, let's get rid of the source and smooth source value. In the input section, we also need to uncheck a few options. And let's change the data smoothing period from 10 to 100. This way we made the indicator much smoother. The next step will be to click on the Indicators tab and add one more indicator. The volume oscillator is a great filter and it will help us eliminate a lot of losing trades. Okay, now let's understand the entry rules for our strategy. So here are the rules for entering a long trade. First, the price action must break above the upper band while the middle line is being green color. The candlesticks also have to be colored in green. Second, the price action needs to make a pullback into the upper band where it crosses and closes below it. Third, the price action must cross and close above the upper band after the pullback. And most importantly, the bars need to stay green during this whole time. Finally, to confirm our long entry, the volume oscillator must be greater than 0%. We're going to place a buy order at the close of our trigger candlestick. The stop loss can be set either at the swing low or at the middle line. For this strategy, we're going to be targeting 1.5 times the risk. Let me give you an example where a long signal is invalid. Here we see the price action broke above the upper band, then the pullback happened, and eventually we had the second breakout. But there is a problem with this entry. You probably noticed it already. At the time the price action made the first breakout, the middle line was being colored in red. So this automatically cancels a long entry. But then a few candlesticks later, the price action closed below the upper band, and then it crossed and closed above it for the second time. The volume oscillator is being above the 0%, so this automatically confirms our long entry. To increase your chances of a successful long entry even more, you can enter the trade only when the lines are pointing upwards and the upper and lower bands are far away from each other. Okay, let's see one more long example. Here the market is trending upwards. This is confirmed by the color of the bars and the line. We see that we had the first breakout. After that the price action made a pullback, and then the second breakout occurred. Notice the bars stayed green all the time. We also take a look at the volume oscillator and we see that it's being above the 0%. The rules for entering short trades are exactly opposite. So first, the price action must break below the lower band, while the middle line is red color. Second, the price action needs to pull back into the lower band where it crosses and closes above it. Third, the price action needs to break below the lower band for the second time. And most importantly, the bars must stay red this whole time. And finally, to confirm the entry, the volume oscillator must be above the middle line. The stop loss can be set either at the middle line or at the recent swing high. The take profit target is the same as for long positions. Let's take a look at one more short example before we do the backtesting. Here we had two breakouts, the bars and the line are red, and there is a high level of volume in the market. Okay, now let's start the backtesting to find the real win rate for the strategy. Okay, so after 100 trades that I found within 4 months, the win rate for the strategy is 76%. We gained over 482% of profit on our account, which is truly unbelievable. The profit factor is 4.75 and we had 12 consecutive wins against 2 consecutive losses. So based on these numbers, I can say that the strategy is consistent and reliable. Obviously, you must remember that all the backtests are unique. Do not base your investment decisions off of these results. You must forward test the strategy first on a demo account before trading live. Okay traders, that's it for this video. Make sure you leave the like button if you found it useful. If you want to see one of my best strategies on the channel, check out this video right here.